which is more addictive? Candy Crush the game or Candy Crush the stock? Time for a little insight and action. All right, so here's the IPO, price at $22.50, midpoint of the range, given earnings of $2.44. That is just 9.2 times earnings. That is very cheap, right? About 40% cheaper than the S&P 500. Only problem, stock's actually down about 10% today. Turns out that King Digital gets about 78% of its revenue from just that one game, Candy Crush. All right? It's not just cheap relative to the stock market. It's actually cheap relative to technology. We look at the roughly 150 stocks in the tech sector of the S&P 1500, and look at this. Only 4 are trading less than 10 times earnings. Yep. King Digital, Candy Crush maker, is one of them. Begs the question, if it's trading that cheap and yet it's also down, do we need to find some other companies out there that are cheap but growing and aren't necessarily going to be quite so much of a burden in the portfolio? Here's what we did. We took those 150 names and we sorted them by PE. We wanted only stocks trading under 15 times earnings, so they're cheap, and also the ones that are growing, where earnings are growing at least 15%, or at least forecast this year, all right? As it turns out, we found about 14. We're calling these the anti-Candy Crushers. Maybe they're going to crush Candy Crush. Some of these names, you know, Computer Associates and LCA Technologies, Corning, right, the maker of Gorilla Glass on your iPhone. Some of them you may not, like Perlicent. Bottom line, I've put all 14 tickers on my Twitter handle, @AJInsight. We're just trying to find cheap and growing technology companies because clearly the market not too happy with Candy Crush King Entertainment today.